In India's highly competitive ride-hailing market, dominated by heavyweights like Ola and Uber, how does a smaller, leaner company rise to the top? Enter Rapido. This Indian startup, once seen as a small fish in a huge pond, has emerged as a fierce competitor, offering a unique solution to a market saturated by car services. Rapido didn't just aim to compete. It strategically carved its own path, focusing on two-wheelers and building a model that catered directly to the needs of millions of Indians. So, how did they do it? What made Rapido's strategy so effective, and why is it becoming a serious threat to Ola and Uber's dominance? Today, we dive deep into Rapido's rise and break down the genius behind its strategy. Welcome to the AI Lib. India's ride-hailing market is one of the most lucrative yet challenging in the world. It's a high-demand environment, with millions of daily commuters and endless traffic jams in cities like Mumbai, Delhi, and Bengaluru. Yet, despite the potential for massive revenues, Ola and Uber, two of the biggest players, have yet to crack the code of profitability. Their struggles stem from a combination of factors unique to the Indian market, such as its pricing sensitivity and over-reliance on subsidies to attract both riders and drivers. When Ola and Uber first launched in India, their strategy was heavily focused on offering deep discounts to passengers while simultaneously paying hefty incentives to drivers. These discounts were meant to create a habit among Indian consumers to switch from auto rickshaws and public transport to app-based cab services. Meanwhile, drivers were lured in with promises of high incomes, even offering down payments for cars or lavish perks like trips abroad. But the problem with this strategy was that it required massive amounts of capital. Both Ola and Uber raised billions from venture capitalists, which they then burned through to grow their user bases. However, after years of offering cheap rides and expensive driver bonuses, they found themselves in a situation where revenue wasn't matching their spending. Moreover, as both companies started pulling back on incentives to become profitable, they alienated their drivers, leading to widespread dissatisfaction and high turnover. In contrast, India's market characteristics presented challenges that neither Ola nor Uber fully adapted to. While their models worked well in Western markets, where car ownership is high and the willingness to pay for convenience is greater, India's economic landscape is quite different. India's per capita income is much lower, and cars are considered luxury items for most people. This is where Rapido saw an opening. Rapido's approach to the Indian market was fundamentally different. Instead of relying on expensive cars and lavish bonuses, Rapido embraced two-wheelers, the backbone of Indian transportation. By focusing on bikes, which are cheaper, faster, and more suited to navigating through India's congested roads, Rapido created a business model that was not only more cost-effective, but also much more in tune with the realities of India's economy and infrastructure. Rapido's journey began in a very different industry, logistics. Before Rapido became a household name in ride-hailing, its founders initially started the carrier in 2014, a B2B logistics company that helped businesses transport goods within cities. The company operated with a fleet of trucks, offering a service somewhat similar to today's Porter or Rivigo. The carrier was profitable and grew steadily, landing clients like Flipkart and Delivery. However, despite this success, the founders felt they had hit a ceiling. The problem with B2B logistics, they realized, was that while it was relatively easy to build a small, profitable business, it lacked the scalability that a consumer-facing business could achieve. Moreover, logistics, while stable, didn't offer the exponential growth opportunities that could attract significant venture capital investments. The founders were eager to pivot to something that had the potential to scale rapidly. During this time, the founders noticed something interesting. Their sales team, who traveled extensively to meet clients, primarily relied on two-wheelers. India's roads are packed with motorcycles and scooters, and for good reason. Bikes are not only more affordable but also faster in dense traffic. This realization led them to reconsider their business focus. Why not leverage India's love for two-wheelers to solve the everyday mobility challenges of millions? Their insights were backed by data. In 2014, around 75% of all vehicles in India were two-wheelers. Moreover, the market for ride-hailing was growing at a rapid rate, with Ola emerging as a unicorn and Uber expanding aggressively in India. But despite this, no one had tapped into the potential of two-wheeler mobility services. The timing couldn't have been better. While Ola and Uber were focused on car-based transportation, Rapido saw a gap in the market. The decision to pivot from the carrier to a bike taxi service was bold, but it was grounded in the founders' deep understanding of the Indian transportation landscape. They knew that offering a cheaper, faster alternative to cabs could fill a significant gap in the market, especially in India's bustling urban centers. With that, Rapido was born, and the founders set out to disrupt an industry dominated by giants. Rapido's entry into the ride-hailing market was brilliantly timed. Ola and Uber were both focused on capturing the premium segment of the market, primarily in Tier 1 cities like Delhi, Mumbai, and Bengaluru. These cities have a higher income population, making them a natural target for services that are more expensive, like app-based cab rides. However, by focusing solely on this market, both Ola and Uber were missing out on a huge opportunity in the less affluent Tier 2 and Tier 3 cities. India's GDP per capita in 2016 was roughly 91,731 Indian rupees annually, which amounts to about 7,600 Indian rupees per month, hardly enough for the average person to afford regular cab rides. This meant that while Ola and Uber were competing for the relatively small segment of wealthier consumers, the vast majority of India couldn't afford to use these services on a regular basis. Rapido identified this gap and moved in to fill it. By offering bike taxis, they could provide a cheaper alternative that was still faster than public transportation or auto rickshaws. The average fare for a Rapido ride was just 60 to 65 Indian rupees, compared to the 180 to 200 Indian rupees that Ola and Uber were charging for a similar trip in a car. This massive difference in price opened up a new customer base that Ola and Uber weren't reaching. Additionally, Rapido's bikes had another advantage: speed. In India's notoriously congested cities, cars frequently get stuck in traffic, whereas bikes can weave through tight spaces and keep moving. This made Rapido not just a cheaper option, but often a faster one as well, especially during rush hours. While Rapido initially started in Tier 1 cities, they quickly expanded to Tier 2 and Tier 3 markets, where the competition was minimal and the demand for affordable, efficient transportation was high. This strategic move helped Rapido gain a foothold without having to directly compete with Ola and Uber in their strongholds. By the end of 2020, Rapido was handling over 5 lakh rides per day, a huge leap from just 500 rides per day in 2016. Their aggressive expansion into smaller cities also allowed them to keep growing even as Ola and Uber's growth began to stagnate in Tier 1 markets. For instance, while Ola and Uber's combined daily rides peaked at 36 lakh in 2019, they had declined to 32 lakh by 2024. Meanwhile, Rapido's numbers continued to climb, reaching 16.5 lakh daily rides by 2024. This strategy of focusing on underserved markets while also offering a service that was both faster and cheaper than cars allowed Rapido to build a strong, loyal customer base, setting the stage for its continued success. One of Rapido's most significant advantages in its battle against Ola and Uber is its relationship with drivers. While Ola and Uber initially enticed drivers with promises of high incomes and flashy incentives, offering everything from luxury trips to 2 BHK apartments, the reality turned sour for many. As these companies scaled, they gradually reduced driver incentives, leaving many feeling disillusioned. At its peak, Ola was offering drivers as much as 1 lakh INR per month, making driving for these platforms a lucrative option. However, as both companies attempted to cut costs and move toward profitability, they significantly increased their commission rates, sometimes as high as 40%. This led to a drastic reduction in driver earnings, sparking protests and dissatisfaction. Drivers began to feel that the platforms were exploiting them, rather than providing the life-changing opportunities they had been promised. Rapido took a completely different approach. Instead of promising the moon, the company positioned itself as a platform for part-time drivers. Rapido didn't require its drivers, called captains, to commit full-time. Instead, anyone with a bike and some free time could sign up and start earning. This made Rapido an appealing option for students, part-time workers, and those who were unemployed. Rapido also offered more realistic earning expectations. Instead of dangling inflated salaries in front of potential drivers, the company aimed to help its captains earn around 70 to 75 Indian rupees per hour after expenses. For a driver working an 8-hour day, This would translate to about 16,000 to 18,000 Indian rupees per month. While this wasn't the life-changing money that Ola and Uber initially promised, it was stable, realistic, and achievable. Additionally, Rapido solved one of the major pain points for drivers: delayed payments. On platforms like Ola and Uber, drivers often had to wait for weekly payouts, which caused cash flow problems, especially when they needed money for essentials like petrol or toll fees. Rapido, on the other hand, allowed drivers to collect payments directly from passengers. This meant that drivers had cash in hand after each trip, helping to build trust between the company and its workforce. By focusing on driver satisfaction from the start, Rapido built a loyal base of captains who felt empowered rather than exploited. This loyalty has been crucial to Rapido's success, as the company has been able to scale rapidly without facing the driver strikes and dissatisfaction that have plagued its larger competitors. While Rapido's initial success came from its two-wheeler bike taxis, the company didn't stop there. As its bike business began to flourish, Rapido quickly recognized the potential to expand into other forms of transportation. The first major expansion came in the form of auto rickshaws, a natural extension of its two-wheeler model. Auto rickshaws are a staple of Indian transportation, offering a convenient and affordable mode of transport for short distances in crowded urban environments. Rapido saw an opportunity to apply the same principles that made its bike service successful to this new category. The key difference in Rapido's approach to autos was the pricing model it introduced for drivers. While Ola and Uber operated on a commission-based model, taking a percentage of each ride fare, Rapido introduced a subscription-based model. Instead of paying a percentage of their earnings, drivers paid a flat fee to use the platform, which could range from 9 to 29 Indian rupees per day depending on the city and demand. This allowed drivers to retain more of their earnings, making Rapido a more attractive option. The subscription model gave Rapido an edge, particularly in Tier 2 and Tier 3 cities where the demand for autos was high, but margins for drivers were tight. In these markets, even a slight reduction in commission could mean the difference between profitability and losses for drivers. By offering a fixed daily fee instead of a percentage-based commission, Rapido helped its drivers maintain higher earnings while providing a predictable cost structure. This model quickly gained traction. In fact, within just a few years, Rapido's revenue from its auto rickshaw segment surpassed that of its two-wheeler bike business. By 2023, the company had expanded its auto rickshaw services to dozens of cities, and demand continued to grow. Rapido's average fare for auto rickshaws ranged between 14 to 16 Indian rupees per kilometer, which was significantly lower than Ola and Uber's cab fares, but still allowed the company to double its revenue per user compared to bike taxis. But autos weren't the only new frontier for Rapido. Recognizing that the core strength of its platform was its ability to connect drivers and riders efficiently, the company began to explore other revenue streams that could leverage its existing fleet. This led to partnerships in the delivery space, where Rapido's two-wheelers could be used to transport goods, not just people. Rapido's first major move into deliveries came through a partnership with Swiggy, one of India's largest food delivery platforms. By using Rapido drivers during off-peak hours, when demand for passenger rides was low, the company was able to generate additional income for its drivers and add a new revenue stream to its business. The partnership was a success, with Swiggy even investing in Rapido to deepen their collaboration. Seeing the potential for growth, Rapido began exploring other opportunities in the delivery space, particularly in the burgeoning quick commerce sector. In 2023, Rapido was in talks with companies like Zepto to help them with last-mile deliveries, where speed and efficiency are critical. Quick commerce, where groceries and other goods are delivered within minutes, was becoming a highly competitive industry, and Rapido's large network of two-wheelers was perfectly suited for the task. This strategic diversification allowed Rapido to expand its revenue base while staying true to its core mission of providing affordable, efficient transportation. Whether it was moving people or goods, Rapido's platform proved adaptable and scalable across different segments of the transportation market. Despite Rapido's impressive growth, it has faced serious challenges, including a temporary ban on bike taxis in key Indian states. Regulatory issues in 2023 led to bike taxi bans in places like Maharashtra and Karnataka, citing concerns over safety and proper licensing. For a company built on two-wheelers, this was a major setback. putting thousands of drivers' livelihoods at risk and disrupting operations in cities like Mumbai and Bengaluru. In response, Rapido took swift action. They challenged the bans in court while lobbying governments, arguing that bike taxis offered an affordable, eco-friendly transportation option. By highlighting the economic benefits for both drivers and cities, Rapido managed to regain permission to operate under revised regulations in certain areas, though the legal battle underscored the fragile regulatory environment. This wasn't Rapido's first regulatory hurdle. The company had long operated in a gray area, positioning itself as a software provider rather than a traditional ride-hailing service, allowing it to bypass certain legal requirements. But as bike taxis grew in popularity, governments began tightening restrictions. Rapido has since worked to align more closely with local laws, especially by implementing better safety measures and stricter background checks for drivers. Safety has always been a concern. Incidents like a viral video showing a driver watching YouTube while riding brought criticism. To address these issues, Rapido introduced stricter monitoring systems and offered safety training for drivers. The company also faced scrutiny for its relatively quick onboarding process, which only required basic identification documents. Although this approach helped Rapido scale quickly, it raised concerns about whether drivers were being vetted thoroughly enough. Another issue Rapido must navigate is its subscription-based payment model for drivers. While this model has helped attract drivers by offering predictable costs, it limits Rapido's ability to scale its revenue. Unlike Ola and Uber, which take a commission on every ride, Rapido charges a flat fee, meaning its earnings per driver are capped. This could restrict growth as the company expands its fleet unless new revenue streams are developed. Finally, public perception remains crucial. Rapido has built a reputation as a local solution to India's transportation needs, but as the company grows, it faces more scrutiny from regulators and consumers. Ensuring safety, proper driver onboarding, and legal compliance will be key to maintaining its positive image and avoiding future bans. In overcoming the bike taxi ban and navigating ongoing regulatory and safety concerns, Rapido has shown resilience. However, it must stay adaptive, ensuring it continues to operate within legal boundaries while maintaining its commitment to affordable transportation. As Rapido's growth accelerated, it didn't take long for Ola and Uber to notice the upstart competitor nipping at their heels. By 2020, Rapido had established itself as a serious player in India's ride-hailing market, particularly in Tier 2 and Tier 3 cities where it offered a cheaper, more efficient alternative to traditional cabs. This success did not go unnoticed, and both Ola and Uber began to mount their counterattacks. One of the first moves came from Ola, which introduced its own bike taxi service in select cities. By launching a direct competitor to Rapido's core offering, Ola hoped to leverage its existing brand recognition and customer base to stifle Rapido's growth. Ola's bike taxis were priced competitively, and the company offered aggressive discounts and incentives to lure customers away from Rapido. Uber, too, followed suit by introducing electric two-wheelers in India. This move was part of Uber's broader global strategy to invest in sustainable transportation options, but it also served as a direct challenge to Rapido's dominance in the two-wheeler market. Uber's electric bikes were positioned as an eco-friendly alternative, appealing to environmentally conscious consumers and giving the company a unique selling point in a crowded market. However, despite these efforts, neither Ola nor Uber has been able to significantly dent Rapido's market share. Rapido's first-mover advantage in the two-wheeler space, combined with its strong focus on Tier 2 and Tier 3 cities, has allowed it to maintain its lead. While Ola and Uber continue to dominate the four-wheeler segment, Rapido has carved out a niche for itself in bike taxis, where it remains the market leader. One of the reasons Rapido has been able to fend off competition from Ola and Uber is its deep understanding of the Indian market. While both Ola and Uber operate on a global scale, Rapido has focused exclusively on India, tailoring its services to the unique needs of Indian consumers. This includes offering lower fares, faster rides, and more flexible payment options, all of which have helped the company build a loyal customer base. Moreover, Rapido's driver-centric approach has given it an edge over its competitors. While Ola and Uber have struggled with driver dissatisfaction, Rapido's subscription model and flexible work arrangements have made it a more attractive platform for drivers. This has allowed Rapido to maintain a strong supply of drivers, even as Ola and Uber face high turnover and frequent driver protests. That said, the battle for market share is far from over. Both Ola and Uber have deep pockets and are willing to invest heavily to regain their dominance. As the ride-hailing market in India continues to evolve, Rapido will need to stay nimble and innovative to maintain its competitive edge. The company's ability to adapt to new challenges and outmaneuver its larger rivals will be critical to its long-term success. So, what do you think? Can Rapido's innovative two-wheeler strategy continue to outpace giants like Ola and Uber? Or will the challenges of safety, regulations, and competition catch up with them? Will their international expansion or move into quick commerce be the key to future success? If you enjoyed this video, please give it a thumbs up, subscribe to the channel, and hit the bell icon so you don't miss any future updates. Check out the videos appearing on your screen right now for more insights and stories from the world of technology. This is the AI Lib. Stay tuned.